So we have Roger Arnold on the line, and he is the all-knowing economist that is a friend of our chapter, and we would like him to have a brief introduction on the state of the economy. Now, when we first set this up, as Roger just mentioned, we kind of talked about the economic impact and how this is going to look globally and specific to China. And we could talk a little bit about that. But as this has evolved, I think the larger discussion really, people are concerned about, what about right here? How is this going to affect, what does the timeline look like? When you pause an economy like this, how long does it take to recover? And understanding that this really doesn't happen very often. So without further ado, I'm going to turn it over to Roger, and you can take it from there. And please, at any point, if you guys have questions, just go ahead and throw it in the Q&A or raise your hand. Roger?
Yeah, and for everybody who's heard me before or seen me speak before, you don't have to wait for me to finish any prepared remarks. I have all kinds of things here in front of me to talk to you about. I will tell you this, just feel free to jump in and say, hey, wait a second. I'm used to talking to EO chapters. It's been going on for well over a decade now. Many of you probably have seen me or heard me, so don't worry about disrupting what it is I have here to talk to you about. When we started considering doing this, I originally said, the U.S. is going to be fine. Everybody's talking about it. So basically, I'll leave the U.S. alone, and I'll start talking about China and perhaps a little bit about Europe. Of course, over the past 10 days or so, things have changed dramatically. I'm getting a lot of calls from people concerning what's going on in the United States and asking me to address that on a regular basis, virtually all day long. So if anybody really wants me to kind of bypass the Chinese or the European situation, the relationships we have from all of them, just feel free to jump in and ask a question. As concerns the immediate issues, though, the United States is going to be fine. I'm sorry, I don't have coronavirus, but I do have my something caught in my throat. We're going to get through this. In the immediate, some of the things I'm looking for right now, as we're talking, is a mortgage industry bailout, okay? Without the mortgage industry bailout, and I believe it will come, the Treasury Secretary should be aware of this, coming from the financial industry background that he has. I think there are enough advisors around Trump to make him aware that this has to be done. For those of you who've heard me talk about this before, the ABCs of global macro, real briefly, I won't explain these in detail unless you want me to, but many of you have heard me talk about this over many, many years. As goes housing, so goes the U.S. economy. So if this bailout, the trillions of dollars that's been allocated so far or is going to be allocated, does not have some portion directed specifically to bailing out the mortgage industry in the United States and thus housing in the United States, the rest of it will have no value whatsoever. It will be wasted money. So I'm looking on a regular basis, daily now, for that to occur. I will also add, in reference to that, if that does occur, I expect the mortgage markets to stabilize. If you've been watching them right now, mortgage rates, although they're down, jumped up. They've been all over the place recently, but the 10-year Treasury yield is sitting at about 0.7% on a yield basis. It went down below 1%. Many of you have heard me talk about that before. If the traditional relationship of conventional mortgage rates to the yield on the 10-year Treasury was today the way it has been historically, you would have 30-year fixed rates down in the 2% area right now. They're sitting about 3.3% at par. The VA, the Veterans Administration 30-year fixed rates are sitting below 3% right now. I expect that as the mortgage market stabilizes, which again will require some sort of a bailout package for the industry, I'll get the rest of the bailout package in a minute. But as long as there's a mortgage industry bailout, not just the Federal Reserve buying mortgage-backed securities, but something there to support the services and to support the non-bank lenders, I expect that market to stabilize and the mortgage rates will begin to fall and well below 3% at par. And for those of you that have heard me talk about this before, I talked about this post the 2008-2009 financial crisis situation, and I said Ben Bernanke was going to make sure that happened. He didn't do it. Which we don't have to go back and talk about. He started to, and then he got scared, I think, for whatever reason. did not pursue quantitative easing on the size necessary during its initial launch to ensure that mortgage rates got to that level. But this time, if we can get that to happen, which will be much easier since the 10-year Treasury yield is already down below 1%, we will automatically have this position in the U.S. economy where there will be a rush to the housing market. And this is a part of the natural corrective mechanism that the U.S. economy has and what to look for on the positive side coming out of this situation right now. That is, as there's a crisis. Yep.
We have a mortgage-related question that just popped in. So a question came from Mike Burney. Him and his wife are looking at potentially buying another house. Should they wait to move forward, as mortgage companies are in flux right now, it looks like, or should they wait till this shakes out?
What size is the mortgage that he's looking at? Is it above conventional conforming? Is he going to have to go into jumbo? And by the way, Mike, hi, it's been a long time.
Let's see if I can.
At any rate, I'll give it to you this way. If you're looking at something above conventional conforming, don't make a move right now, okay? The conventional conforming rates, rather for investments or for owner-occupied, vacation homes, second homes, fine, go ahead and move forward with something like that. But if you're in the non-conforming, the jumbo category, that's the part of the industry that needs to be bailed out. If it's in the jumbo area, they're in crisis right now. I was just on the phone earlier this week with today's Tuesday, last week, Friday, all the days are merging together now with a lot of the guys out there in California. And in the housing market, it's basically as goes California, so goes the rest of and I know a lot of you have heard me talk about this before as well. But their mortgage.
Conforming range.
Conforming? Yeah. Yeah, then fine. Move forward immediately. Don't worry about it. Especially if you're somewhere in the Washington, D.C. area. If, for example, right now, given a situation like this, if there's anywhere in the world you want to be, it's the United States. And if there's anywhere in the United States you want to be, it's the Washington, D.C. area. The D.C. area traditionally does very well, even when something like this occurs. That is that government spending goes up as the rest of the economy goes into some sort of a recession or a downturn. About 25% of all government spending, whether it's stimulus packages or otherwise, every year, no matter what, enters the economy by way of the Washington, D.C. area. So there, when the rest of the country is in a recession, the D.C. area has a tendency to boom. So I will leave that alone for now. Feel free to ask me any other questions about that, though. And just, again, jump in on me about this. As far as we know moving forward, though, once we get past this situation with the mortgage industry being bailed out, again, coming back to the mortgage rates, I am looking for them to be falling down. As they fall down, coming back to the corrective mechanism that we have in the U.S., that is what we should see. Is that to me? I saw something on the bottom of the screen there, or is that to somebody else?
It's just the chat function going through.
Oh, okay.
I'll stop you if somebody asks something.
All right. Well, what I'm expecting is if these rates get down below that level, starting in the Washington, D.C. area, probably out as well out in California, you're going to stimulate a lot of housing demand. And that will happen without media support. Media won't be talking about it. It's going to be happening within the industry, within first-time home buyers, people looking at the marketplace right now. And I want to talk structurally about what that looks like. People traditionally make decisions about buying a home during the holiday season, the end of the year holiday season, traditionally in the United States, between Thanksgiving and Christmas. That's when usually renters, first-time home buyers, I'll leave the rest out of it for the time being, but traditionally renters and first-time home buyers begin to look at the prospects for them to buy a home during the next housing season, which is the spring and summer. What you want to see is, as you putting this coronavirus stuff aside, is that in the spring, summer housing season, that the mortgage rates that existed when they were looking, talking to realtors, talking to mortgage lenders during the previous holiday season, you want the mortgage rates during the following spring, summer season to be at that level or lower. Since the 2008-2009 crisis, every single year except one, I can't remember what it was, it might have been 2013, but they've been higher. And what that means is people start looking at homes during the online, talking to realtors, figuring out what they can afford. And if the rates jump up, it means the affordability has decreased. instead of getting the 3 bedrooms in the garage, the realtor has to come back and say, well, the mortgage rates went up, so now you qualify for 2 bedrooms, or you got to get rid of the garage. People get demoralized, feel as though the rug has been pulled out from under them, or Lucy just pulled the football away from Charlie Brown, and they go back and lease for another year. So this has happened every single year except one since the housing crisis of the 2008-2009 timeframe. This time, that's obviously not going to happen. We clearly are going to have mortgage rates well down below what we saw during the last holiday season. This is this is money going on sale. And as money goes on sale, eventually people are going to start saying, screw this coronavirus situation. We need to buy a home. This is as good as it's going to get. 30-year fixed rates just went below 3%. And for those of you that heard me talk about this before, that's kind of that key psychological number because it's never occurred before that people are looking at. And it doesn't have to be everybody all at once. It's just a couple of people on the front end of the curve that decide, you know what, this is as good as it's going to get. Our jobs are secure. Let's go buy a home. And as it starts to snowball and drag everybody else forward, and that becomes the corrective mechanism, the large corrective mechanism that traditionally kicks economies, especially the U.S. economy, which has a very strong housing market for reasons, we don't have to get into, but I'll address real briefly. Since the 1930s, the government has kind of counted on housing as an economic recovery tool. That's why we have a lot of legislation, regulation concerning housing. Won't go back in and describe what it all is, but generally, the reason we do that is because housing has a direct impact on the economy. It's a rapid fire into the economy as homes start getting purchased. Government leaders have figured that out. That's why presidents focus on it, because they have very short terms of office. So if you can stimulate housing, your chances of getting reelected are increased as a result. And this has snowballed ever since the 1930s into what we have today. And I'll leave that alone for the time being, unless somebody else wants to get into it. Furthermore, going back to the jumbo loans, though, for the time being, leave those alone. That doesn't mean sell your home. It just means if you have the opportunity to cautiously wait to see if that industry is going to be bailed out, I would do so. A lot of people in that mortgage market, 500, 700,000, 800, $1 million, $2 million. Above that level, people generally pay cash for homes versus leveraging them. But if you're looking at $1 million, $2 million mortgage, a lot of those loans have already been pulled. Those lenders, many of them around the country, have just gone belly up almost overnight as a result of the dislocation in that marketplace. So wait to see if they're going to get bailed out, and they should. Again, I think they're smart enough right now to figure out that that's the one part that's been left out of this package that definitely needs to be addressed. So if you're looking at it in the news, watch for that to occur. Now, leaving that alone and coming to the bailout package in the United States, there are some positive things about it, and there are some things that concern me about it. It looks very similar, although much larger, to the bailout package we did in 2008 and 2009. For those of you that heard me talk about it back then, that package was too top-heavy. It was a panic result, financial crisis. The government came out, TARP, etc., and targeted at the top of the economy. Bail out the banks, bail out large companies, stimulate them with the expectation that they would start lending and that they would start producing jobs. That's trickle-down economics. Without getting into it any further, there was almost nothing put in at the bottom of the economy at the consumer level. We're doing the same exact thing here. We're bailing out the banks. We're bailing out big companies to try to stabilize the economy, but there's really very little coming in. I mean, we're talking about $1,000 for people or $1,200 a month or something along these lines. They're not even sure what they're going to do with all of this, and that's just not going to be enough. So I'm hopeful that this time around, that this stimulus package will start to have more of a bottoms-up approach, getting money straight out to consumers, straight out to small businessmen and small business owners overall. I'm not happy with the SBA loan program for many of the reasons, but if any of you have seen it and gone in and applied for loans, the stipulations that you have to stay away in case any of your employees want to unionize, you're not allowed to talk to them about it. That's just not something that Pelosi and her crew ever should have put in there. I think that's going to cause a lot of people, a lot of small business owners to back away from that program, which means there will be no stimulus or very little stimulus as a result. Putting employees and employers against each other in this situation was a horrific, terrible, terrible situation. Hopefully Donald Trump will be able to step in and do something about that in the future. I also want to address real quickly, I don't mean this from a political standpoint, but in this situation, I'm not happy with the way much of the kind of the way we've been addressing this on the national level through the executive has been achieved. But on the other hand, you don't want to go from the frying pan into the fire, which thank God we have basically Donald Trump running this. If it was Hillary running it, much of the U.S. economy would have already been nationalized. I'm absolutely convinced. Having said that, we'll see if Trump can kind of wrestle back control of the narrative of what's going on. And let me address that real quickly. Kind of the main issue with respect to the problems that we're seeing, the kind of the shock initially, the trauma that has set in with people, is really not due to the coronavirus situation. I think you've heard other people talk about this before, but it's not that big a deal. Unless you are elderly, infirm, have a weakened immune system, by and large, the numbers are showing that for the young, most of the people on this call, people who are productive members of the economy, they have little, much like the flu, but little really to be concerned about. So this idea that when you're faced with a situation like this, for example, let's put it this way, if you were putting all of this aside, pretending we're all back in school and we're in a logic class, be it a math class, a statistics class, philosophical logic, and we threw something out there and the instructor says, okay, everybody here, let's just pretend that you are the president of the United States, the leader of the free world, the person that everybody in the world turns to for advice. And a situation like this unfolds. A disease, a plague begins to expand wildly around the world. It turns into a pandemic. You've got to make decisions about what to do. Early on, you start to figure out, or scientists, medical establishment starts to tell you that it looks like it's the elderly and people with the weakened immune systems that are most at risk of what's going on here. It doesn't seem to be really getting the young, the very young especially, are not seem to be infected or really affected by it. And so what are you going to do? What's the first thing you're going to do? And then student Donald raises his hand and says, I'm going to send everybody home to hide in their closets and pray. Now, at this point in this situation, I don't mean this as a joke. The instructor's going to say, well, let's stop for a minute, class, and talk about some things. First of all, as we've all heard before, there are no dumb questions, right? But there are certainly dumb answers. And that was a dumb answer. When you have elderly people that are affected, but young people that are logically not really affected by it, as most of the evidence is supporting, you do not take the productive members of your society and tell them to stop being productive, because they are the people paying the bills and affording you the opportunity to make sure the people that are affected have the financial capacity, either through themselves or through their families, their localities, their churches, their governments, etc., to pay for the things that are going to protect them. So this was a major problem in the way this has been addressed to this point in time. Now, the reason that occurred is because, and I don't mean this to be critical of the political system or critical of the medical healthcare system, but I want to address it, is because our government lost control of the narrative concerning this situation because they kind of got caught off guard by it. People can be critical about Donald Trump, as I've seen in the media. The time for throwing stones is not now. We have to address this situation. But Trump and his team lost control of the narrative, turned it over to Drs. Birx and Fauci. And I'm sure they're excellent doctors, but they are doctors. And I have many friends who are doctors, but they have a Hippocratic oath, do no harm. They are not there to address the entirety of this situation. They are there to address the virus itself. The cost of doing so is not their concern. That's Donald Trump's concern. That's the government's concern. Allowing them to kind of take a front and center control of the situation and address it the way they have. And they seem to be very nice people. But as you see, for any of you who have watched, not just the daily briefings from Trump, but any of the other interviews they give, it always runs along the line of, don't worry, we've got it under control. Everything's going to be okay. But by the way, we are all going to die anyway. And this is freaking everybody out. This is not what you want to hear from these people. They need to be dealing with this situation in some other fashion. And it's going to require the government, our political leaders, really Trump and his team, to pull this narrative back away from the doctors. The problem with this, of course, is on the other side of this, through the media, through the government. You're hearing Andrew Cuomo in New York, Newsom in California, and other Democratic leaders who really want this to continue. because it is very bad for Trump, arguing that we need to have science, that this is going to be corrected by science. No, it's not going to be corrected by science. It's going to be corrected by scientists that advise government leaders, and government leaders then take the information provided to them by scientists and have to make a balanced approach as to how you are going to deal with the economy and deal with the virus. It has to be balanced. This is the way life works in all capacities. You can't just focus on the virus. Having said that, they were shocked by this. There was trauma involved in this. I think we're now beginning to get it under control. I think what you're going to see is that they begin to get the narrative pulled back away from the doctors. And I certainly hope that the doctors are told, you've got to stop with the whole, we're all going to die. 1 million to 2 million of us are going to get it. 200,000 of us are going to die. Guess what? That would be a terrible, terrible flu season, but that's about all it would be. And people need to be told that as well. Having said that, the portions of our government that have to deal with this mostly on a regular basis, balancing death and not death, are our military leaders. These are the people, and that doesn't mean that you need to have them out in front like Fauci and the rest of them. But behind the scenes, they need to be talked to about exactly how do you make decisions about who you're going to be putting at risk, because you don't have a choice to do otherwise. Sometimes people are going to die. That's part of life. You're born, you live, you die. The elderly should not be expecting the productive young members of society. I don't mean this to be kind of a lecture, but just kind of get us aware of what's going on right now, to be protected them. It should really be the other way around. It should be the elderly that are saying to the youngsters, their children, their grandchildren, their great-grandchildren, etc. It's our time to go if we have to. And I mean this very seriously, in order for this economy to continue running. You can't, time does not stop. This is somewhat similar to if you're driving down the highway, not to use too many analogies here, but if somebody in the left-hand lane stops because there's a box in the road in front of them, they're addressing the box. They had better damn well look at what's coming from behind them. I have actually seen this occur on highways before, where a woman stopped. This happened on 495 around DC area, and a big giant truck literally ran right over the top of her and crushed her. The economy cannot be stopped. Time cannot be stopped. You can't just stop everything because you're trying to deal with this virus and figure out what to do. You have to make decisions that are going to be collective, cohesive, concerning everything. And I think we will start getting that back. Now, one of the things really working for us in that area is that the initial phases of this have passed. They have an awful lot of data that supports what I just told you in reference to the elderly being at risk, the infirm being at risk, the young by and large not being at risk. The other aspect of that is it's very easy when it's cold outside and it's cloudy outside and it's not very nice outside to get people to stay inside. But as the weather starts to turn, everything's getting nice outside, people are going to start saying, I want this taken care of. The trauma's behind me and I'm going to start going outside. And government leaders are going to have a real problem trying to enforce making people stay inside, not be productive, continue worrying about where their income is going to pay from and how they're going to pay their bills as it starts to get nicer outside, and parents keeping kids inside, and things along those lines. These are really very pragmatic issues. So I hope that and expect that all of these things are going to kind of come together as we start getting through the next 30 days or so, and that by summer, this largely will have been resolved. If that means we need to start sending people back to work and telling people and expecting people to act in a responsible manner. That is, if you have a weakened immune system, stay home. If you are elderly, stay home. And even policing the situation to such that if you find people out there that are walking around in those situations, that you have to arrest them and take them into a situation where they're going to be isolated. You might have to do that again from a pragmatic standpoint. I'm not talking about civil liberties being taken away or doing something along the lines of what Orban's doing in Hungary, where basically all constitutional rights have been suspended and he's set himself up now as a totalitarian dictator. This is something that's scaring the European leaders right now. We can talk about that in a minute because the European Union is likely going to be dissolved as a result of this situation playing out as well. I'll just throw that out there. We can talk about it if you want to. I think right now, though, as concerns the United States, the real opportunities, as I was talking about a minute ago, if you want to look at the bright side of this, look at housing. watch the mortgage rates on a regular basis. There are plenty of different sites you can go to. By the way, just send me an email to rogerarnold@gmail.com. If I can send some sites out to you, or if you want to talk to me, just ping me and I'm happy to get on a call with you and talk to you about anything in particular that you may not want to talk about on this call. I can send you the URLs of sites to watch. Watch for the mortgage rates to come down. Watch for them to break that 3% level. Don't wait for the media to tell you about this, because they won't. That's going to be your signal that the corrective mechanism to drive the economy forward is still working, okay? Other aspects of this, on the negative side, avoid energy. Do not get involved in the energy complex. You know, we've got this compounding situation where you've got this glut of supply because Russia and Saudi Arabia are pumping. They're destroying the alternative oil sector in the United States. A lot of them in the Permian Basin, right up through the middle part of the United States, are going to have to shut down. We've been through this before. A lot of those guys are going to get in real trouble. It's very easy for oil prices to fall to $10 a barrel, perhaps even below 10, maybe even as low as $0 a barrel. We'll just wait to see how that goes. But for right now, just avoid energy. People have been asking me about things like XLE, one of the closed-end ETF funds. Don't do it, all right? You can watch it. Don't invest there. Amazon. Obviously, Amazon is going to, you know, the time to buy Amazon, really, in my opinion, was last week, sometime maybe 10 days ago. But just buy it. They're in front of this entire thing. That's just going to continue. And it's, you know, so
right.
Yeah.
We got a question coming in from Chip, and it says many countries had a huge debt and deficits prior to the crisis, and now that the economic these economies are getting crushed, are we going to see some defaults, and could that snowball into something else? And you had mentioned the European Union being dissolved. I don't know what your take on that.
Yeah, a lot of you have heard me talk about this before. Let me address it on the sovereign basis, then I'll look at it from a corporate basis. On the sovereign basis, the insolvency threshold, without going into this in detail, because I've talked to many of you guys about it. If you want me to do this in detail, again, just ping me here or elsewhere, and I will, but I don't want to be redundant for those of you that heard me talk about these things before. The insolvency threshold, and this is for all sovereigns, is 25% of tax receipts being used to service sovereign debt. That is, that once your sovereign debt, your country level debt held by your government, exceeds, or the servicing of that debt, paying the interest on that debt, it exceeds 25% of the tax receipts coming into the government, there is nothing that can be done to avoid insolvency, okay? Modern economic theory stipulates that that is not the case, which I think is a tragedy. It is the case. It is math. It's a simple mathematical formula. We can talk about that at some other time, perhaps if you want me to come speak to your chapters or something along those lines. This will send everybody beyond that level. Japan has been beyond that level for over 10 years. Japan is right now at a situation, if it stopped borrowing money, about 65% of its tax receipts would be needed to service its existing sovereign debt, and that's with their interest rates at almost zero. Japan is insolvent, period. It's just a mathematical situation. Now, people then ask, well, how can it continue operating? Well, because people keep borrowing or keep lending money to it. Why they do, I don't know. And I don't know when they're going to stop doing so. But they are beyond the insolvency threshold. At some point, that likely will occur. This situation, however, is going to force everybody. And when I say everybody, principally we're talking about China, Germany, and the United States, beyond their sovereign threshold as well. Before this occurred, we were sitting at about 17%. We are clearly now going to go through the 25% level. By the way, once you go through the 25% level, once more than 25% of your tax receipts, it's a door that shuts behind you. You can't then go back down. I'm not going to explain the math right now, but once you go through it, that's why it's called the threshold. You can't go back down. So, some people think you can. Japan has been trying to now for a decade. They keep announcing, we're going to raise taxes, we're going to lower taxes, we're going to increase spending, we're going to decrease spending. It doesn't matter what you do. And as a matter of fact, it's like quicksand. Anything at the sovereign level you do to try to reverse that trend actually quickens it. Okay, just like when you're in quicksand, don't move. That's what you want governments to do once they go through this threshold level. They can maintain things, but don't change things. Once you start changing things, it makes the situation worse. Even if you think it's going to make it better, it doesn't. Whatever you do after that point just makes your debt level go up, makes your servicing level go up, no matter what you try to do with interest rates. Again, look at Japan. Their interest rates across their entire yield curve are essentially zero, and their debt service just keeps rising. And people, again, ask me, at what point are people going to stop? And I say, I don't know. Maybe once they get through 100%. When 100% of your tax receipts are being used to service your debt and you have no money to pay for anything else, maybe then investors will wake up and realize, oh no, this isn't going to work. They should have already done so. They haven't. I'm not really worried about it though, okay? I have been of the opinion, I've told many of you that I think all major countries are going to have to essentially address the insolvency issue at the same time. That event is called Jubilee. It is historically, or there are historical points of reference to address that situation. A Jubilee event is when basically you wipe out your sovereign debt, or any other debt for that matter, but at the sovereign level, that's what we're talking about right now. Because everybody is so linked together from a global basis, this is part of the globalization process. Jubilee event will basically require, again, those four biggies: Japan, China, Germany, and the U.S. to get together and lead the rest of the world towards nullifying sovereign debt. This will happen in 5 years or 20 years or 50 years or whatever, okay? But we're going to address it. It's not going to be a crisis. I wouldn't worry about it. People talk to me about that. What does it look like when the U.S. goes broke? It looks like nothing. Look at Japan. They're broke. They're still operating. Everybody's over there still paying their bills. It'll be fine. It's an accounting system. There's all kinds of things you can do from I'll just throw this out to you before getting to some of these other issues. If they want to, they could address it right now. That is, they all get together. They collect up all of their sovereign debt into their central banks, and then you use that as collateral for issuing a gigantic zero coupon bond that's 1,000 years in duration, and you hold it on the books of your sovereign central bank, and you deal with the issue 1,000 years from now. And people, when I talk about this, they laugh and say, oh, that would never happen. Look, in the 19th century, in the United States, we financed the railroads using 1,000-year and 2,000-year bonds, okay? There is historical reference for all of this. If you just, a zero coupon bond is one that doesn't need to be serviced, by the way. The value of the bond just keeps growing over time. It's called negatively amortizing. The interest just compounds on top of it. So you don't have to use existing money to service it, robbing it from the economy. It then sits on the books of the central banks and is just an accounting system. So at any rate, I'll leave that alone for the time being, because there's all kinds of ways of dealing with this. Another thing to address real quickly, in reference to whether or not the Fed is out of power, or the ECB or the BOJ or the PBOC in China. No, they can do all kinds of things. There's all kinds of things that can still be done. If the U.S. Fed wants to, the Federal Reserve wants to go in and start buying houses to support the housing market, it can. If it wants to start buying used cars, it can do basically anything it wants to, as long as the U.S. Treasury agrees with them to allow that to happen. So anything that has to happen to make sure this economy doesn't collapse is going to happen, and the tools to do so are there. So don't worry about that. All these people talking about how we're all going to, this is going to turn into the zombie apocalypse and things like that. These are people that simply have no idea what they're talking about. We will figure this out. We have all the tools to do so. We don't need to create any more tools to do so. So that's not going to be an issue. Having said that, there are real reasons to be concerned about what's going on in the rest of the world and the impact it might have on the United States. As I was just talking about, which I'll again put to the sidelines, the EU is almost certainly going to break up. I'll put that aside now and talk about China. The Chinese-U.S. relationship is very, very dangerous. We have historical preference or a reference for this as well. We'll just explain that very quickly. The Chinese history is about 6,000 years old. It's a little spotty in the first 2,000 years. The most recent 4,000 years, though, is we have a complete connectivity to. We know exactly the way the Chinese economy has been run, how it's open and closed, how it's dealt with the West in the past for trade purposes. I've talked about this in the past, but I'll again address it real quickly because it's very, very important. Oh, by the way, I addressed some of this at Alchemy in 2012, which is, for anybody who doesn't understand, that's like NERV, except it's for the West Coast. So I was in Seattle. There should be a video. If you go to Google and just type in Roger Arnold alchemy, you should find it. Roger Arnold videos, it should come up. You'll see it. I think it was 2012 alchemy. I think I opened that presentation talking specifically about China and the way money flows in China and the potential for money to leave China and what would happen. So I don't want to kind of get into that here because you've got that video. It's about FDI, foreign direct investment, how it flows in, how it flows out, how the Chinese react to it. Excellent video. Definitely something to be aware of. I'd actually forgotten about it. People started sending it to me last couple of days, asking me to comment on it. I was like, oh yeah, I forgot about that. But it is really good. I would go look at it. But from a longer term historical perspective, the way China and the West have dealt is a pattern of repetition that is really the longest in all of human history. And it always goes exactly the same way. And this is the way it goes. I will use the 19th century as a, well, what occurred between the West, really the British Empire and China. There was no US empire at the time. This is most of the 19th century, the 1800s. There was a situation known as the Opium Wars, which took up really kind of the middle, most of the middle part of the 19th century. And that is, real briefly, the British basically stole the trade routes from the Portuguese, started sending their ships. Overland routes had stopped. The Silk Highway used to flow in from China, across China, up into Mediterranean area and over into the European area. And by the way, it broke north and south at Taklamakan, the desert of Taklamakan on the west side of China. It's a big, large desert. And the Silk Road broke to the north up into Europe and broke to the south, going through the Vakhan corridor into Afghanistan and over the mountains of the Hindu Kush into the oil fields and things along those lines. And by the way, if you haven't seen it, I would go look. Afghanistan, by the way, has a border with China. It doesn't look like it if you're familiar with math, but you go look. There's this little sliver called the Vakhan corridor. Whoop! Goes straight over and connects to China. Fascinating story. We can talk about that some of the time, or you can Google. There's probably articles I've written about it. You can find them on Google. Having said that, traditionally what happens, and what happened in the 19th century, the British would take their ships down around, around Africa, around India, and over into Shanghai. And one of the things that developed was a trade imbalance. That trade imbalance, this is what always happens, by the way, is basically that the British would buy a lot of stuff from the Chinese wouldn't buy anything from the British. And you can't, over a long period of time or structurally, have a trade imbalance. It doesn't work. Mathematically, accounting-wise, it doesn't work. So the British were trying to figure out, how do we close this? They won't buy anything from us. How do we close it? And what they learned, and I'm not, by the way, saying that this was, all China's fault and the British were wonderful, because the British weren't wonderful about this. But they learned that they could stop in India, buy a whole bunch of opium, take it over to Shanghai, and close the trade gap by selling opium to the Chinese citizens. Well, the entire China started getting stoned, and I'm dead serious. They were all stoned all the time. And the Chinese government came out and said, hey, wait, you can't do this. And the British said, well, you got to buy something else then. And they didn't want to buy something else. And the way the Chinese responded, which is the way they always respond, is they, instead of saying, you're right, we're wrong, we should have bought something else. If you stop selling us opium, we promise we'll start buying stuff from you. It's the correct thing to do. If you want to have real trade, no. They embargoed the ships, took all the British ships over, enslaved their crews. And of course, the British then just said, no, you didn't. And now the owners of the ships in Britain went to the government and said, all those guns we have purchased for you, use those to go get our ships back. And that's how the Opium Wars occurred. And again, this was a rolling series of events through most of the 19th century. Unfortunately, throughout this process, one of the things that also occurred was that the opium trade actually became, it started as a Band-Aid for a trade imbalance, but once it was in place, the British decided they liked it. And so the Chinese came to them during the wars going on and said, hey, look, at no mas, we'll fix this. British said, no, never mind. We like doing the opium trade now. And this is how the wars kept getting bigger and bigger. And finally, they culminated in Macau going to the Portuguese. The Chinese lost the war. The Chinese always lose. Every single war, they lose. Hong Kong went to the British. Formosa, which we call Taiwan, went to the Japanese. I'll put an asterisk next to that, leave it alone for the time being. But, 100 years go by. 1997, Macau and Hong Kong go back to China. It's not fully back to them. They have a series of things they have to do to work this out over the next 50 years or so before they can have complete control over it. The point being, however, is that the way the trade develops with the Chinese, for some reason, a trade imbalance always develops, and the Chinese always then respond to being pushed to close the trade imbalance by doing the exact wrong thing, the exact opposite of what they should do. This is a cultural thing in China. We are dealing with it right now as well. And again, I'm not saying this to bash the Chinese. This is just, again, the way it works. It's something that happens at the social level, the cultural level. The leaders of China really have little control over it. Xi can't really do much about it, although I think the government should be trying.
So we have a related question on the book from Leon Garber. Says basically intel sources are saying that China is not on the other side of this COVID-19 virus, and both actual numbers of dead and containing the spread is many times higher than what they are admitting. Have you heard the same, and does this play into the Chinese and the way they deal with stuff?
Yes, absolutely. Never believe anything the Chinese say. I'm sorry, but that's just the way it works. I've been studying the Chinese economy for decades now. It's actually worse now than it was 10 years ago, 20 years ago. 20 years ago, you couldn't trust them, but you could piecemeal together. You could figure out what was going on. I talked about alternative measures many, many years ago. I started talking about look at energy consumption versus their real, the numbers that they're telling you that they have concerning economic activity. They always lie about it. I don't know why. They shouldn't, because that's no way to get foreign investors who they really need, especially from the United States, to have confidence in your economy. Unfortunately, this is what they do. I have absolutely no reason to think that they would be honest about the way the coronavirus came about, the way they dealt with it, the number of cases they have, how it's expanding, or otherwise. As a result, of course, our government knows this, and they're going to have a longer and perhaps even permanent trading or a travel ban with China by necessity. Simply because we can't trust what they say. This gets into the entire discussion that we're having right now. Having said that, China also has, they have a population distortion that they have to deal with as well. I think I've talked about this. They have way too many men, not enough women in China. As near as we can figure anyway, there's a disparity between the number of male deaths versus female deaths. Far more male deaths, and that's probably because they're all smokers over there. A lot of smoking goes on in Asia. Women generally don't smoke, men do. And the Chinese government, I'm not saying this is true, but may very well have discovered one of the cheap, easy ways of getting rid of your male population and rebalancing your male-female situation is by letting this go. Traditionally, the way you do that is by going to war. If you've got an excess of male population, you go to war. I would prefer us not to see war, but I think it is very likely based on what has happened historically. And that's something to be aware of here. That's one of the reasons I wanted to have this call and focus on China. But again, since then, a lot has, just over the past 10 days, has occurred in reference to the United States that we really need to talk about as well. There's a lot more here on it as well. But with respect to that, yeah, don't believe what China's saying. As a matter of fact, just disregard anything China says really about anything. The heat maps that I think Google is showing for crematoriums and things along those lines, that's where you're going to get smarter anecdotal information with respect to what is probably really going on there. It's the same thing has been going on with respect to the political prison situation in China and the number of people that are in those prisons, etc. And I'll just leave that alone. Again, let's just don't trust the Chinese numbers and the idea that they're beyond the peak and things along those lines. And they may very well have decided this idea of flatten the curve is a bunch of bunk. It's kind of, take the Band-Aid off fast or take it off slowly. They may well have just decided, let's get past this situation and just let this thing run. And the people that die, and the people that don't. And maybe there's immunity after you get it, maybe there isn't. They're not really sure. But again, going back to what we were talking about in the beginning, we're likely going to have to decide on a similar course of action. That is where the people, as I was talking about a little while ago, people who are really at risk, you tell them, stay home. If you're going to go out and you die, you die. But the youngsters that are largely not at risk, if you want to stay home, stay home. But we got to get the economy going again. Let's all get back to work. And some of us aren't going to make it. I'll tell you right now, and I'm dead serious. I've mentioned this before in previous calls. I would, if they had a system set up where you could go get the coronavirus, if they knew there was an immunity built up to it, I would go get it right now. I would put myself at risk for it. I got to get past this thing. I have a daughter. I have granddaughters. My daughter works in private equity. She's scared to death about this. A lot of young people are scared of it. I'm perfectly willing. I'm not patting myself on the back about this. My basic function as a human being has been fulfilled. I've propagated the species. I've financially secured those I have propagated, as well as those I have propagated with. My purpose has been fulfilled. They're taken care of. My social function is done. If it's time for me to check out and let them move on, then that's what I do. And I'm dead serious about that. I've never been afraid of death. I'm not afraid of it now. And again, that's not being some macho sort of thing. And I've talked about this to a lot of the chapters as well. Don't go through life being in denial of your own mortality. It makes life dull. Accept it. You're going to die. Appreciate every moment you have. Look outside. Appreciate the day. Appreciate the sun. Appreciate the people around you. Treat people the way you want to be treated. Know that your time is going to come up at some time. Don't pretend it's not going to. I can't make it any simpler than that. But coming back to the Chinese situation, the way this is playing out, we have this pro-cyclicality to it. That is, if you've seen in the news, not only is China not owning up to this situation, having caused it and telling the world, we're sorry, we should have dealt with this before, decades ago, we'll deal with it now. No, they're saying it was the U.S. Army that did it. This is one sure way to really tick off the U.S. government, especially a president like Donald Trump, and ensure that the response you get from him is not going to be nice. I don't know why they do this, but they do it. I expect as well that they're going to continue down this path. The other aspect of that, as I was talking about a minute ago, is forget what government-to-government relationships are like. U.S. investors, and this is what's in that video from 2012 Alchemy, are going to get scared. Now, the importance of and that means they're going to slow down money going in and or probably start leaving. And this isn't just because they're afraid of China, although China's exacerbating that situation. It's because this situation is likely going to be the last straw for the relationship during this round between China and the West. That is, governments, businesses, and society overall, including consumers, are going to say, we have bent over backwards over the last 30 years, increasingly so, as you have joined the economy, doing things for you that you didn't deserve, allowing you to enter the WTO when you didn't deserve to enter the WTO because you didn't meet any of the requirements, on the expectation that as we provided you money and allowed you the opportunity to grow and create a middle class, that you would start buying U.S. goods, Western goods. That is not happening. It doesn't happen. The Chinese like Western goods, but they buy Chinese knockoffs of Western goods, which then leads you to the judicial system in China. And U.S. investors U.S. investors are at a disadvantage in judicial proceedings in China to the Europeans. The Europeans are get more advantageous treatment, but neither of us in the West gets treated anywhere near like the Chinese do. I've dealt with this in China on a regular basis. I know there are a lot of EO members that have business in China as well. I've never said this to beat up on China. This is simply the way it works. I have dealt with China at the highest level. I mean the very highest level in China, across their economy, across their government functions. I don't get into those stories. I've told them in the past as well. It is as corrupt can be at virtually all levels. And you just have to deal with it. And again, we can talk about the nuances of why that is in China and at some other time. But in this particular instance, as it continues to play out, I fully expect that we are going to be pressuring China and that China will push back, again, just as they did during the Opium Wars. And that eventually what is going to come out of this is either we leave China completely, and what I mean by that is, again, socially, consumer-wise, government-wise, business-wise, just decide we're done. We can't deal with you in China. You're not going to buy our goods, which is what we really have been looking forward to. We're going to start moving our manufacturing facilities outside of China. Forget just because we don't know what's going on there. And let me address this on the side. There's nothing new about the export of a disease out of China. It's been going on for decades. If you go to the WHO website, World Health Organization there, they have documented it. And you will be absolutely blown away by how many times this has gone on. We just don't read about it in the media because it doesn't usually make it to a pandemic level. But this goes on typically several times a year, hundreds of times in some years, where something starts and fizzles out, but it gets tracked. This time it turned into a pandemic. Chinese rural areas outside of their urban centers is largely still a third world. And it's important to call it third world and not emerging market. Emerging market is second world. The Chinese urban centers are largely second world. None of China is a first world, as is the United States and Japan. First world countries are countries that have a large ingrained research and development, high technology center base. China has been trying to move or has wanted to move in that direction and desperately wants to become a first world country, but can't. And the reason it can't is because of all the reasons I just explained to you. Money will not flow into China. It's very expensive to build research centers. People who are going to invest into high technology have to invest a lot of money. In order to invest a lot of money, you have to be sure you have legal protections, and many other things as well, access to infrastructure, high quality employees, etc., bank, financing, etc. But principally, you need to be treated fairly, and you need to know that you're going to be treated fairly. Otherwise, the money won't flow in. China has been caught now in a situation known as the middle income trap. Middle income trap, some people say it doesn't exist. Some people say it does exist. It does exist, period. Middle income trap is what happens when a country that has moved from third world status or emerging market into second world status, which means it has built roads, power systems, a manufacturing base, and perhaps a housing base, started elevating its consumer base and building itself up, which is very cheap to do. It's very cheap and easy to do. Parts of Africa are finally beginning to move in that direction. You would think, well, why doesn't everybody do it? Because there are a lot of countries, governments in places like Africa that don't want to leave third world status because the leaders like it the way it is, all right? China, however, did create a second world urban center basis over the past 20 years or so, this large infrastructure program, increasingly they put in place, especially after they panicked during the 2008-2009 crisis. Even given how much money they've spent, and people talk about this, all the cement that's been used in China over the past 10 years or so, it's more than the United States used in the last 100 years and things along those lines, is nothing compared to how much you have to invest to move from a second world or manufacturing-based, housing-based economy into a first world technology, research, and development-based economy. Very, very expensive. And again, you have to have an enormous amount of money flowing into your country to make that happen. Unfortunately, given the way this situation has unfolded and the way China has addressed it so far, responded to it, it looks like it is inevitable to me. I can't imagine they're going to realize that they're screwing this up, because for some reason they just never do. It's like this collective obtuseness that they don't get, that money is going to start flowing away. And once money starts flowing away from China, rather than saying, uh-oh, we realize we made a mistake, let's try to convince money to stay, they're going to start doing things like trying to prevent U.S. investors from leaving, nationalizing assets of investors who are leaving, at which point more money will flow away and China will do even more of this, and at which time it harkens back to the opium wars, where the business owners, the ship owners, trade route owners went to the British government and said, we bought you a lot of guns, go use them to get our stuff. And I'm afraid that, if Apple starts, even if Foxconn leaves with them, moves somewhere else in the world, and others start fleeing as well, developing in places that have shown a propensity to want to get out of third world and second world status. Mexico, for example, right below us. Just move your facilities there. I've talked about that for a long time. This is really probably going to be the catalyst that makes this process accelerate. If that does occur, however, it really sets the stage for there to be a hot war between China and the United States. And again, these things, once these things start, they snowball. It's very difficult once this process starts to reverse it. You have to reverse it early on. And when I say that, when I'm looking out at what's going on in the media, what I hear government leaders say, what I hear business leaders say, forget our media. Our media is junk in this country. It's a tragic situation, but it is. You got to look at what our business leaders are saying, what our bankers are saying, what members of the Fed are saying, what the private banking establishment is saying, what guys on Wall Street are saying, what guys from our government are saying, and listen to, see if they're aware of the things we just talked about. See if they're aware of this pro-cyclicality that we've been talking about in reference to the way China and the West deals with each other. It doesn't have to be overt. It doesn't have to be in your face, but behind, can you read between the lines in what you hear them saying? Are they providing evidence, even if they're not saying it directly, that they're aware of it? Because that's what you need to see from government leaders. If you become convinced, and so far I'm not really seeing any awareness. Now, I will tell you, on the part of those people of this issue, I will tell you there are people in the U.S. government, long-term sections, non-elected positions, and I'll leave it at that, at very high levels, that are aware of it. They're aware of this entire process and everything I've talked to you about institutionally. They get all of it. They just shrug their shoulders, look at me and say, tell me something I didn't know. Say, okay, well, thank God, at least you guys are aware. And I appreciate that. We have portions of the U.S. government that have access to the executive, I'll leave it at that, that are aware of it. Okay, and our military is certainly aware of it. So I wouldn't be, but is our civilian government aware of it? Are our civilian business aware of it? And if they are aware of it, what we really need to start seeing is that they confront it publicly. These are things that have to have the light of day in order for the danger in them to go away. And that's really one of the first things that has to happen. Now, if we talk about it publicly, again, the Chinese aren't going to like it, but they'll be forced to confront it. So I'm hopeful that we'll see Donald Trump. And again, I'm really very thankful, and this is not a political comment, that he's in charge here and not somebody else, either within the Republican Party or from the Democratic side. So I think a lot of people in the business community, in the Wall Street community, and by and large in the global community are really appreciative of that as well, even if they don't want to say so. Let me stop there. I don't know how long we've gone. I've got other things to go here, but I think there are questions, but I'm not sure.
Yeah, we have a couple questions, and to kind of circle it back to the U.S. economy. Mike, Bernie asks again a couple interwoven questions here. As it relates to the U.S. states individually becoming insolvent, is there any kind of indication as the worst places to be in business or best places to move as this shakes out?
Yeah, that's a great question, Mike. It really is. First of all, almost, the D.C. area is one of the places you want to be. Virginia, and again, for the same reasons I talked about. By the way, if anybody hasn't seen Tyson's Corner, Virginia, collectively, that is the largest infrastructure program going on in the United States right now. It is akin in size collectively, with all the private buildings going on, to some of the infrastructure programs that are going on in China. And people have talked about those infrastructure programs for an awful long time. In Tyson's Corner, by the way, the caps on the buildings in Tyson's Corner, Virginia, right outside of D.C., there used to be caps on the buildings. Those have now been removed. So I've been telling everybody, in 20 years, Tyson's Corner is going to look like Manhattan. If you look at it, you can Google it. I wrote some articles about this as well. You might Google like Roger Arnold Tyson's Corner or something like that. You might be able to find them. I'm not sure whether my previous publisher is allowing people to look at those things. They might not be. But again, I can send you articles I've written if you just send me an email and you're interested in some of this. But there are cranes everywhere there. Now, in Maryland, because it has traditionally a Democratic government that is not very friendly towards business, hasn't seen as much, but still it's a very good place to be in reference to the rest of the country. Before getting into other parts of the country on a statewide basis, I want to address real quickly, one of the things I've been telling people is look for an infrastructure program to be coming out from the federal government. Remember, both Hillary Clinton and Donald Trump ran on an infrastructure program. I was really demoralized that once Trump got elected that he didn't push it. Trump became convinced that he could put everybody back to work by way of tax cuts. Don't get me wrong, tax cuts are good. But the problem with tax cuts in an environment where you have an increasingly technologically driven economy that is displacing labor is that tax cuts become a way for companies to have more money to displace more labor. So it accomplishes the exact opposite of what you had intended. The idea was companies would expand and grow their businesses. Donald Trump thought that would create jobs. He didn't realize they would invest more money into technology to actually provide this discontinuity for U.S. labor, the dislocation, the labor being on an accelerating basis being displaced by technology. So one of the things that technology can't do right now, at least to the extent that can be done for white collar jobs, is it can't build buildings. So if you want to really put these people back to work, I'm hoping this becomes kind of the epiphany and the catalyst for Donald Trump to realize, hey, we need, look at Florida, we need an infrastructure program. We need a massive one. I ran on it. Sorry, should have done it. He'll never say sorry, by the way. But hopefully he will realize the tax cuts didn't produce what I thought they would do. This is the catalyst for me to really do an infrastructure program. Look at Jacobs Engineering, symbol is J. Look at Fluor Corporation, F-L-O-U-R. Send me an email. I've written many, many articles about this long before this situation on what to look for if an infrastructure program is going to be put in place. I think, if anything, this is the time for that to occur. So if that does occur, that will itself act, again, coming back to Mike's question, as a bailout for the states, which will be necessary. A lot of states have pension plans that they can't meet. Illinois is essentially bankrupt. It used to be JEC, Mike. It's J now. I think if you go on, Jacobs, I think they changed their ticker to J rather than J. It used to be JEC, and Fluor is FLR. There are some others as well. In keeping with that trend as well, the government contractors, the traditional government contractors are all defense contractors. The top 10 are all defense contractors. By the way, that's always a safe place to be. Lockheed, General Dynamics, Raytheon. There are others in there as well. Send me an email. I'll get you all those tickers. Always a safe place to be no matter what. Now, they are not going to want to be left out of an infrastructure program. So don't just look at the guys that are traditionally bridge builders and things along those lines. I'm thinking Chicago Iron and Bridge. I think they just went private last year. It used to be a public company. You can Google it, but I think they went private. But there are other infrastructure programs. But Lockheed and these other guys, they're going to want to glom onto this as well. So from a risk perspective, definitely if you have money in your portfolio, your 401k, your pension plans or otherwise, kind of the safest way to go about all of this, everything in here, defense contractors. That means we're either going to have an infrastructure program and the government's going to pay them for that, and or we're going to go to war with China and the government's going to pay them for that. So, I think that's really kind of a very safe way to go, the defense contractors, but keep an eye on the infrastructure programs. Coming back to the state level basis. Unfortunately, I love California. I've talked to EO guys out in Orange County on a regular basis. Did a presentation out there a couple of years ago. It didn't go too well, so I haven't been talking to them recently. Had a little bit of flight lag out there. You can talk to them. I felt bad about it, but it just didn't go as much as well as I wanted to. And look, my office was in California as well. It was in Pasadena for many, many years. Most of you know that. I love California. It's a great place to be. Unfortunately, it's a horrendous place to do business, and that's only going to get worse. So I would definitely not want to be there, especially in this crisis or in this post-crisis era, because California is going to go to the U.S. government and say, can we have some help? And if you get Donald Trump reelected, the idea that they're going to get any substantive help from the U.S. government after they've bashed him so badly is highly unlikely. Hopefully Newsom is smart enough to start saying nice things now about him, realizing the way the whole thing is going to go, and I'd be watchful for that. But again, things like Illinois, I wouldn't get into. I wouldn't go into Florida either, but that doesn't really have anything to do with this. Traditionally, I have always avoided South Florida, Miami. Definitely never do business in Miami. I know the guys down there as well. I have a tendency to tick everybody off everywhere, I guess. Again, safest place to be is always the Washington, D.C. area, but expanding out from there. North of us, don't do business with Baltimore. South of us, Charlotte, wonderful. I think Charlotte's going to do very well. Virginia Beach area has always done well. But the Virginia Beach area really has a very proactive government down there. And I think they're going to survive this and perhaps even expand on this. And I can talk about the Virginia Beach area at another time, but they have always really handled these situations, economic disruptions. Now, I'm not talking about disease, but economic disruptions, much better than almost anywhere else in the country. The inner parts of the country, the ones that are inside of the 200-mile range, are generally, I look at urban or the coastal regions as being up to 200 miles inside of everything from the north, Maine, Washington, Oregon, all the way down and across the borders into the south as being where you want to do business. I wouldn't be doing business. Memphis, Mississippi, avoid them. Nashville, fine. Nashville's great. But if you keep going towards the west, from there, you're getting into a no man's land. The middle part of the country, unless you're going to start buying up farmland, I would just generally avoid. But that's always been my advice. Now, so far, it hasn't been hit by this situation as well. So if you want to fly your family out there because you don't want to have coronavirus, I think that's fine. But that's probably something you want to do after you are done being in business or being actively in participating in business. Are there any other questions?
Yeah, so shifting away from business to, say, consumer goods. Next question up is also, again, from Mike about consumer goods, pricing, groceries, supplies, inventory. Do you feel like this is a sustained spike in some of these products, or is this the new normal?
No, this will work itself out in very short order. Now, having said, let me talk about what I mean by short order. The damage that has been done to the U.S. psyche is really pronounced, and I'm sure it is everywhere else as well. But again, coming back to the beginning and telling everybody to go hide in your closets. Put lamb's blood over your door and hope the angel of death doesn't come get you, has done real damage. And it's going to take time for the consumer base to get out of that. This is one of the reasons it's extraordinarily important for the mortgage rates to get down below 3%. That will pull people out of their fear back into a risk-taking mechanism and begin the snowballing process of correcting this. As far as the grocery stores go, though, I really do feel this idea of stockpiling a year's worth of toilet paper. Come on, man. That's ridiculous. I was at the grocery store the other day and there was no tacos and there was no pasta. I mean, people are getting ready for Armageddon. So, I understand, again, our politicians got shocked, caught off guard. This was allowed to become a shock and trauma situation for society, broadly speaking. I think most of that is behind us. And again, coming back to this, I think it's very important. The spring season is here. If you go outside right now, the birds are singing, and I don't mean this facetiously. The buds are out on the trees. The weather's getting nice. People are this is going to start pulling people back into a proper frame of mind and a reference for the way this is all going to be handled. So no, I don't believe that this is going to be a systemic crisis. I think that's virtually all behind us at this point.
You also mentioned the mortgage loans in that last response there. Do you think the mortgage crisis or whatever we're going right now, whether the bailout is going to be, will that add to the length of time that it takes to close a loan? Do you think that?
No. Again, listen, what we could go through is what's known as compression. It's been a long time. I haven't talked about this probably since 20, probably back in like 2005, 2006, when the mortgage industry really started having shakes as a result of the stupid lending problems going on. But there's going to be huge opportunity out of this. Let me explain what I mean by that. Compression in the housing industry occurs when you're looking at price per square foot, when the cost as a percentage of price per square foot for big homes starts falling below that for middle class homes. That's known as compression. Usually, the bigger a home is, the better the materials and the more expensive it becomes on a square foot basis, price per square foot, okay? It's just something to keep an eye on. Compression occurs when people start saying, I can't get mortgage financing, so I can't buy the big house. The sellers start realizing they have a very limited consumer base and prices have to fall. And as a result, compression starts building in. This is what may very well occur. Now, if you're on the buying side of this, though, especially if you're a cash buyer, if this process continues and we don't get that mortgage bailout for the jumbo lenders I've been talking about, which again, I think will happen, but if it doesn't happen, there are going to be really fantastic deals in that space, something to be watchful for. But if you're in the conforming market, you can do a VA loan, FHA loan, a Fannie Mae, Freddie Mac conforming loan, and those limits are all different depending on where you are in the country. You're fine. Nothing's really going to be impacted by this. Did that answer the question? I hope it did. But as far as by the way, a lot of people like to live in big giant homes. I did so once, raised my kid, had a fantastic time. Don't want to do so anymore. But for anybody who wants to buy a big giant home, this is the time to be watchful. Kind of get yourself into this mode. Watch to see if there's going to be a bailout of the big mortgage lenders. A lot of them have already gone under. In that marketplace, again, it's as goes California, so goes the rest of the country. A lot of the California lenders disappeared overnight. By the way, that doesn't mean that they couldn't work. They couldn't sustain this. It means there was a margin call. Many times what they do to protect their asset base, this is just the way life works. It's business. We all know it, is you shut doors and you tell your lenders, sorry, I'm bankrupt. You're not going to get paid. Too bad. Thanks for playing. And then once the crisis passes, what they do is they reconstitute their lending facilities under a new name and start lending again. So just kind of keep an eye on that entire process. If that doesn't happen, you are likely going to see compression in that marketplace. Now, you won't see it in places like McLean, Virginia, DC metro area, DC proper, inside the city, but many of the suburban areas, other than those I just talked about, you are going to start seeing that. Yes, Mike, you could see it in Georgetown as well. Okay. But probably not nearly as much as in other parts of go out to Leesburg. Again, this is outside the DC area, could get absolutely decimated after they built these big giant neighborhoods out there. Those neighborhoods could really get clobbered if we don't bail out that high-end lending market and these become cash buyers for these properties, or big down payment, putting 50, 60% down in order to get a mortgage.
So shifting, looking at the state level again, Chip Dodd has a question in here about where we are on the curve of the virus and everything that's going on as it relates to opening the economy back up. The question is, aren't governors going to have to keep us on lockdown as long as the hospitals are being overwhelmed with the cases that do trickle over into that the percentage that need hospitalization? Well,
this harkens back to Andrew Cuomo's comments up in New York, and this was just a week ago. He was bashing Trump for not having the Army Corps of Engineers build hospitals that we need immediately. And this is just ridiculous stuff. It's politics. When somebody says something like that, you've got to disregard them. Okay. First of all, you don't need to build hospitals. We have plenty of universities that aren't functioning that have dorms. You take them over and you function there. We have in our urban areas where most of this is, you have hotels that are not being worked. You commandeer the hotel, you pay some nominal fee to the owner during the process, and you convert it immediately into a hospital. This is not a problem. We don't have enough hospital beds. I'm sorry. Furthermore, so that's not an issue. I don't care what the media is telling you. They can do this anytime they want. The flattening of the curve, by the way, remember, was not ever about saving lives. The flattening of the curve was about extending out how many people were going to die, putting their deaths in an orderly fashion. That's what the majority of the flattening of the curve was about. Nobody, and again, this is what the doctors were saying. It's not what I'm saying. They're going to die anyway. We just want them to die in an orderly fashion. The ventilator issue was one issue, but they had figured out ways of using 2 people on a ventilator and things along those lines. So this is, I'm sorry that the medical establishment doesn't want to deal with this. It's a triage situation. You get triage situations. You deal with triage situations. You don't shut the economy down. And I think we're on the verge politically, again, at the executive level as well as at the state government level. The governor's realizing we can't do this indefinitely. That is something that the medical establishment is going to have to simply have to deal with. But coming back to that point, the flattening of the curve was never about really saving lives. It was simply about trying to make it an orderly process for the healthcare industry, the medical system. And again, there are other ways of dealing with that, as I just talked about. Start commandeering, get the government commandeer hotels, commandeer other places, put people in there, use your people as best you can. There are a lot of, around hospitals, for Christ's sake, there are a lot of hotels. Commandeer those, at any rate. A lot of the stuff coming out of the media with respect to this, again, coming back to the media, I tell people, and again, I think it's terrible to have to tell people this. I've done it for years. Turn it off. They are capitalizing on this. They're capitalizing on this entire situation for political purposes, for ideological purposes, for their own personal gain. Listen to me. You need to tune in every night for my show because my show is the most important show. It's terrible the way this situation. But furthermore, I would say this is also evidence that they all know this is not the zombie apocalypse. It's not Armageddon. Otherwise, they would all be running for the hills as well. So I think we're beyond this. I think we've flattened the curve enough that we can actually begin to start sending people back to work. And although Trump has said we're not going to make that decision until the end of April now, that is not because it can't be done. It is, again, coming back to what I was talking about, having lost control of the narrative and scared the public. And it's not just here. It has now happened all over the world because they all listen to this. And I'm not being too critical on Trump, but you simply can't let the healthcare system manage the narrative. They are there to manage the healthcare proportion of what has to be dealt with. Our government leaders have to deal with the totality, the cohesive nature of what this is going to cost. And you have to make hard decisions about that, not just say things like Andrew Cuomo did the other day. And I don't mean to be beating up on him, but he has really taken political advantage of this situation in saying things like, we're not willing to risk one life for this. Of course you are. We deal with this all on a regular basis. We all have to balance everything. This is why you have people getting a Big Mac and large fries and a Diet Coke, okay? I don't want the Big Mac. I'm going to save myself, though, with the Diet Coke. You have to balance everything in life. Your entire life is about choices, okay? And unfortunately, when you're faced collectively as a society with a situation like this, you are going to have to let some people go because it is simply too expensive not to. That's the pragmatic reality of the situation. I hope I answered that question.
Yeah. Thank you for that. And we have the next two are somewhat related. Eric comes in with a very broad question of what do we do in the next month or two, and then and whether it may or may not be related. The next question is, are we back in the stock market now? Do we pull out, be conservative? Do we ease back in, or wait for a bounce back signal?
If you didn't get out before this, you just stay. Period. As a matter of fact, if you're scared and you don't want to deal with any of this, don't look. I'm dead serious. The U.S. economy, if there's anywhere in the world you want to be, again, it's here. We have all of the tools to deal with this situation. It's a matter of whether or not they're going to. I am of the opinion that they are going to. I believe that they are aware, especially having come out of the 2008, 2009 crisis that is right behind us, that they know that they should bail out the mortgage industry on the jumbo side. If they don't, remember, I just told you there's opportunity there. If they don't, the conforming market looks very strong. Look for these mortgage rates to go below 3%. The stock market will be fine as well. I don't know if this is the last hiccup for the stock market, but I'm not worried about it. The way I look at investments, I know I've talked about this in the past, is I'm not a trader. I look at them all as permanent investments. They are not, I make it, it's for my kids. It's not for me. At least I try to put myself in a situation where that's not going to be necessary, okay? I look for something to buy. It's a good deal. I buy it, done. I'm not going to deal with it anymore. It's time consuming to deal with it. I then look for the next thing to buy. I don't look at the thing I just bought. It's been bought. It's like putting your kid on a bus. You know, you're on the bus, go to school. You know, I got to now deal with your little brother who's still at home. You follow me here? So there's a use of time perspective. If you haven't gotten out of the stock market and you're freaked out by it, don't do anything. Leave it the way it is. It will self-correct. Again, we have all the tools to do that, and they're beginning to use some of those tools now.
So are we to expect a moderate slide before the bounce back, or is this just going to be a volatile?
Look, if the mortgage market continues to go through its normalization process that it's doing right now, 30-year fixed rates being at 3.3% on par for a Fannie Freddie type of loan, below 3% for a VA loan. And again, I can't not overstress this. You better be watching it. We go below 3%, first-time home buyers on the leading edge are going to start saying, I'm not waiting. First of all, I'm not getting the coronavirus. We're going to buy a home. Might be bad for my grandparents, might be bad for my parents, but I need to live my life. And that's the way it's supposed to be. So keep an eye on that. As far as the stock market goes, the stock market will rebound. I think that process probably already has started. It's not impossible that there could be another shock to it. You know, again, come back to the U.S.-China situation. If people begin to think that we're going to war, they might get scared there again as well. We could go through this for another reason. But again, I wouldn't sell out because of it. I wouldn't try to trade it. I've talked about this before. I know a lot of traders. I've known a lot of traders for decades. I've known a lot of traders that make a whole lot of money and then on a single trade lose every penny they have. And I'm dead serious. I've talked about this before. Go look at Victor Niederhofer up in New York. Good friend of mine, tried to save him from blowing himself up. He was rated the #1 hedge fund manager in the world. Blew up and lost everything during the Asian contagion of the late 1990s. Managed to convince clients to come back, built himself up to be the #1 hedge fund manager in the world again, leading into the housing crisis of the mortgage crisis, housing crisis, 2008, 2009. I warned him again to get out. He told me I worried too much. He lost everything again. Okay? This is what traders do. Traders are convinced they know everything, that they're smarter than everybody else. Listen, if you think you're smarter than everybody else, you're in real trouble. You better be aware that there's always something coming down on you. Always. Something's going to sneak up on you. I could go over multiple issues. My calls on oil, my calls on gold, my calls on some other things over the past 10 years or so that haven't panned out because issues arose that caught me off guard that I wasn't expecting. Nobody else was either. But things have a tendency to sneak up on you. So don't think you're too smart and that you can trade this. Traders are going to blow themselves up. They're blowing themselves up all over the place right now, okay? Even trying to trade this. Forget having been blown up because of the virus itself and the initial financial market response to it. They're blowing themselves up. Trading also takes a lot of time. So I was just talking about, if you want to make money, look at things from give yourself rational expectation. Don't bottom feed. Look for good deals that you think you're going to be able to hold forever. Buy it, move to the next deal. You bought it, let it take care of itself. If you made a good, strong purchase, like I was just talking about defense contractors, you can buy Lockheed, General Dynamics, all the defense contractors, and never look at them again. They're all going to be fine. That's just the way the world works, unfortunately. Perhaps at some point in the future, we will have a government that has adopted things like universal basic income, which is pushing money into the bottom of the economy versus the top of the economy, which means they would have less money to spend in government contractors. At that point, you might want to revisit this issue. But as it stands right now, things like a universal basic income are not on the horizon. This may be the catalyst for that discussion to occur within our governments and within our society, and I expect that will occur. But right now, it's not going to happen immediately. I'll leave it at that. I hope that all made kind of sense.
Yeah, so we have time for one, maybe two more. We have one in from Martin Joseph. Do you think the PPP loans will be totally forgivable as the government has suggested they are?
Yes, absolutely. I think as long as the way they've laid, first of all, I'm not a fan of these public-private partnerships, okay? Never was. That's for a different time. Knowing that there's a time sequence here. The time is of the essence, and you have to get these things out. I think that putting the forgivability in there is a way of making sure, with as little regulatory oversight as possible from an active perspective, of ensuring that the borrowers act in the manner in which the government wants them to. And yes, I think the government will make those completely forgivable as long as you do as you're told. Now, if you do a lot of what businesses did during the TARP days, and you get the money and use it for things it wasn't supposed to be used for, forget paying it back. You're probably going to jail. Okay, so forget the forgivability. But if you have the ability to get access to some of these loans and you have the forgivability issue built into yours, obey the rules, and yes, it will be forgiven. I can't believe that they would say that it's going to be and then not do it in the future.
And last question on the board currently is, are we at a risk of socialism?
Well, there's always, part of being a democracy is being socialism. I think if you're talking about socialism as it's traditionally been practiced on a much larger scale than what we have in the United States, no, I don't believe we're there. But this gets to some of the things I've talked about in the future. I just mentioned universal basic income. That is not socialism, by the way. Okay, I want to be very clear. A lot of misinformation and disinformation concerning that. We are moving as a society in a direction where we will eventually have to adopt something like a universal basic income by necessity. It's completely within capitalism, democratic belief systems, even libertarian belief systems, because it allows you to downsize your government dramatically, okay? But as labor continuously gets dislocated and displaced by technology, we are eventually going to have to do things like that. That is not socialism. This is, again, something I generally do a much longer multi-hour presentation on, explaining kind of the marching down. It's known as the global meta-narrative, which is the intersection of energy, debt, energy technology, debt, and demographics. It's which I won't get into, we just don't have the time. But by and large, put this coronavirus thing behind us. Everything that humanity is going through right now and our marching forward is positive. We will turn positives out of this entire situation. Well, real positive things about it is it's going to cause us as a government, as governments, state, national, countrywide, countrywise, and other parts of the world as well, to address reality of some of these situations I've been talking about. The insolvency issue for sovereign debt, which governments say, no, it's not there, it doesn't exist. The displacement of labor, the need to do away with income taxes, replace it with an asset tax-based model, which I won't get into now, but will become necessary. Adopt chartalism. Chartalism is when governments print money into existence instead of borrowing money into existence. I think that is also inevitable. We used to do it that way. And again, adopting universal basic income. None of those things is socialism, though, but it is dramatically different than the type of government and the relationship people have with their governments than we have seen in the United States or in other parts of the world previously. There's a lot of misunderstanding out there about these issues, though. So as they start to become more and more a part of the media headlines, there are a lot of people that are worried that we're moving in that direction. I am not one of them, and I've lectured on this for many, many years. We're fine. We're not going to move in a real, historically precedent socialist fashion.
Any impact on alternative currencies or cryptocurrencies?
Yeah, look, I've written about that in the past as well. I was a big fan of Ether. Wrote about Ether before it even existed, quite frankly. I wrote about it when it was a theory, as a corrective, it was a cryptocurrency correction to the failures of Bitcoin. Unfortunately, that industry in total did not align itself as closely enough to the banking industry as it should have. It should have gotten good advice, good business people in there, and I think it's simply too late now for all of them. We will move in a cryptocurrency direction, but it's going to be along the lines. Look at what happened to Facebook. Facebook could have dominated it, and they got told, yeah, you do that, you're going to get crushed by the government. And so I think what we will see is that cryptocurrencies, which are very positive, will definitely be rolled out, but it's going to be rolled out on a sovereign basis. And as a result, I have simply walked away from the entire space. And I think it's really a tragic situation for that space. I think the people who are working it have basically now given their entire technology over to essentially the historical banking system, the Federal Reserve, Treasury, the money centers in the United States, as well as on a global basis. So from a crypto perspective, I would avoid it. Unfortunately, I'd like to say otherwise, but I would just avoid it completely.
Awesome. Well, I tell you what, we are at 90 minutes, and Roger, this has been incredibly insightful. Thank you so much for your time.
Let me hit something real quickly, though. From a personal perspective of having to deal with this, take vitamin C, and not the vitamin C tablets. I know Vern Harnish was talking about this earlier this week as well. I've dealt with this for many years. I've taken vitamin C in the powdered form. You want to get something that's like 5,000 milligrams in powder or crystal form. You get it off of Amazon. Don't get the stuff made in China. This is the stuff made in China. Don't get it. Looks like nice. It's called Thompson. You look on the bottom, made in China. Don't buy the stuff made in China anymore. And that's not, again, not because I don't like China. It's because you really don't know what you're going to be getting. There's plenty of stuff made in the United States. The reason this is important, real quickly, the coronavirus is not a living thing. I don't know if anybody knows that. I'll try to keep this really, really short, but it's basically a DNA type of program with a nucleus with a fatty substance around it. The reason you wash your hands so much, and you're told to wash your hands so much, is that it breaks down the fat that's over the DNA, and that causes that fat is what protects the DNA. When you dissolve that fat, the DNA automatically breaks down. The coronavirus is not a living virus as people normally think about it, though. This is also why you take vitamin C. You take a couple spoonfuls, maybe a teaspoonful in water. Put a little baking soda in there. It'll make it go down easier. But do it every single day. I know plenty of people that have done it. If you want to spend even more money, it's really cheap. This is like 16 ounces, something like that. You can get it for $10 or something. It's going to last you a month or so. You can do high dosed vitamin C. That's going to be more expensive. You can even get it intravenously, but you don't have to. Pills, those little vitamin C pills, junk. They do nothing for you. It's got to be
kind of like the emergency. There's a question like, are those the high dose, but it's still over the counter, typical?
Yeah, you can if you want to do high dosed vitamin C, you can do it. Emergency is okay, but it's not enough in my opinion. See, this is a 5,000 milligram. You can get a 1,000 milligram, but in my opinion, you should be doing at least 5,000 milligrams in a glass of water, which is basically 1 teaspoon in a glass of water, at least once a day in the morning, preferably twice a day. That's what I do. The vitamin C breaks down the fatty tissues. It also breaks down the mucus in your lungs if you have a cold or anything else. It's the simplest, easiest thing you can do to help enhance your immune system. Just do it, period. I hope everybody starts to do it, but from the perspective of protecting yourself, start doing it immediately, okay?
Awesome. Thank you, Roger. And thank everybody for being on the call. This call is going to be recorded, and we'll send it out for those that participated in the call in case you wanted to listen back. There's a ton of information that was shared. And again, Roger, you've always been a friend to the Southeast Virginia chapter, and hopefully we'll get you back in person one of these days once this is all.
You will.